Good morning, dear friends. We are closer and closer to probably the most pivotal point of February. Tomorrow's United States Consumer Price Index release, publication of the main inflation barometer of the United States economy. And as you can see, from the situation in the world of financial markets, we take into account the stock market and the foreign exchange market first of all. Here it's a very interesting and very shaky kind of situation. A combination of probably kind of stability in the stock exchange market, in the demand for the risky assets, as well as a rising of the United States short-term and long-term yield of United States bonds. Altogether, that combination is very, very special one. And tomorrow's United States CPI data probably should answer the question about a nearest future of some of the risky assets as well as the United States dollar itself. Regarding today, our analysis is slightly changed. What we'd like to point out first of all, it's the strength of the Japanese yen, which we seeing this morning. Now it's already below 107.50. The level of 107.30, the lows of 2017, is the next probably intermediate kind of support level in the dollar yen, and it will be very interesting how the pair will behave itself on the possible break below. Let's see the chart in the dollar yen, and here we can see that if we break below 107.30, it probably means that the next target should be a longer term uptrend which lies today around 105.70. What else? Why we did not sell the dollar yen this morning on the break below 108? First of all, because tomorrow could change the situation in the foreign exchange market, quite change the situation. So we prefer to wait for tomorrow's CPI, United States CPI release before make any kind of new to enter any kind of new position in the yen crosses. The same applies for euro yen, for sterling yen, for those who trade this currency pair. The euro dollar we decided, and we still, as you can see, more or less successful in our chasing of the euro dollar higher. The break of the formed head and shoulders pattern on the 4-hour chart, which you can see the break on the upside, could mean that probably the euro is on the upside again, and probably it slowly returning to its major uptrend, the uptrend which formed at the end of 2017 and the beginning of 2018. The next, say, closing above the moving average 200-hour line, which lies around 123.50, will also support the acceleration of the uptrend higher. But of course, a lot will depend on tomorrow's United States CPI publication. What is another kind of dampener for the next upside potential of the euro dollar is the election in Italy in March. Of course, now it's February and the March is still lies ahead, but anyway, the market always prepare itself beforehand. That will mean that probably we enter a kind of not a kind of calm period of the Eurobulls. That will mean that probably in the future, in the nearest future, we should be patient and vigilant with euro long positions if we have it. What else? Also regarding tomorrow's United States inflation data. Here is a kind of interesting combination. If, for example, tomorrow's CPI will be better than the market expected, it will mean that the United States Federal Reserve should be more aggressive in its path of hiking interest rates. And for sure it will mean that both the short-term or long-term United States interest rates should go higher. And from this point of view, of course, it should dampen the future potential of the United States economy, despite of the last steps by the United States President administration, like tax reform or infrastructure spending plans. Altogether, of course, it's the stimulation of the United States economy, but probably here the more aggressive stance of the Fed will be a decisive factor for the United States dollar, and it could mean that probably the dollar will get another impulse to go to the downside, but not to the upside, because in this case, of course, also the stock market will come under increasing selling pressure as well. Altogether, but let's see this kind of analysis. Let's discuss this kind of analysis tomorrow in our morning's report. Not today, because the data should be released tomorrow. And what we'd like also to pay your attention this morning. We'd like to be as possible safe as we can. And from this point of view, we don't like to rush into new positions. Probably tomorrow we will be more aggressive and more active. But now you can see that we're still chasing for example, the majors up to the upside and the dollar to the downside, because we still think that the underlying trend, United States dollar trend, should be bearish in the nearest future and probably during the course of 2018. Also, we pay your attention on the safe haven currencies like Japanese yen and Swiss franc, which from our point of view have a very nice potential to rebound from here. And from that point of view, we positioned ourselves to sell such currencies like dollar yen, dollar Swiss, and probably euro Swiss. We should change our strategy, and also that's apply for the euro yen, where we are ready to buy at 31.50 with a very close stop. But anyway, maybe here it's the time to change the strategy to the downside. But regarding the euro yen, the situation here, it's not so negative, because while the pair is still trading above its moving average 200 daily line, which lies today around 130.82. That's why we put our stop on a possible accumulation of a long position at 31.50. We put a stop below this moving average line, but also we have to consider the weekly line, which lies today. Let's wait. The internet speed is fantastic. Okay, it's lies today 29.71. Altogether, this level 130, around 130, which is also a psychological level for the euro yen, presents a kind of critical level. If we break below 29.70, I think we will have a very good downside potential for the euro yen. And we suggest that the driving force here will be, of course, the Japanese yen and its strength, because we still predict the euro dollar higher from here. So that's that's all at the moment. That's our analysis for today. We wish you a nice day ahead, and hope that tomorrow in the morning you will be with us, and tomorrow in the morning we will be once again revert to the publication of the United States CPI report, and probably the first appearance of the newly appointed Fed's President Jerome Powell, with his first appearance on February 28. See you later, and bye bye for now.